Hello, welcome to today's Social Climate. I'm your host, Matt Anderson. I haven't done one of these videos in probably 2 weeks, and here I am. I feel the need to put out one of these videos today just to update everybody on the conditions of the financials markets here today, March 30th, 2025. Now, what we're seeing is a bunch of chaos in the markets emerging as of late, ever since Donald Trump was elected. And as previously discussed in my videos, I thought that Donald Trump, all the market gains that we had during his first term, would be erased under his second term. And we're seeing a bit of this occurring right now. My prediction is coming true. He has got into the presidency back in 2005, January. And it's only been a short 2 months since he's been in power, and the market has already corrected, I don't know, greater than 10% or around 10%. And this is due to the fact that he is going around trying to restructure the debt, trying to implement tariffs on all other nations. He's trying to create a ruckus in order to create social chaos, economic chaos, in order to get some kind of restructuring going. So the momentum of the restructuring to occur. This is very much needed and very much will happen, whether Donald Trump does it or not. But it looks like Trump is getting ahead of the snowball right now and trying to do something before it actually turns into a climactic crisis, which is a good thing. He's doing something, but he's not doing enough. He's gradually easing the American people into this restructuring. I think that's what his term is going to be all about, and that is what we're going to see for the next 4 years or less than 4 years. Now, as a result of all of this restructuring, or the talk of restructuring and the tariffs and the trade wars, the stock market has taken a hit. Now, this hit is not significant yet. It's only about 10% off the highs of 6,200 on the S&P. But it will get worse. It's going to get much, much worse. I predict by the end of this cycle that the stock markets will crash 50 to 60% from the highs. You heard me right. That's 60%. I would say 60% or greater from the highs. And the reason I say this is because it's so overvalued. The valuations in the market currently are so farcical. They're so fairy tale-like. They're all predicated upon zero interest rates and a booming economy. But that's not the case anymore. The economy is not booming. The interest rates are not zero. So all of the malinvestment, and I've discussed this in my previous videos, all of the malinvestments that have occurred ever since the financial crisis of 2008 are in the trillions, tens of trillions. As a matter of fact, you look back when Donald Trump first got into office in his first term, during his first term, back in 16 and 17 and 18, I remember seeing Dow 24,000 on CNBC. They had these little hats that they came out with on CNBC, and they were bragging about the Dow hitting 24,000. Well, the Dow's not 24,000 anymore. You know, it's only been, 8 years? That was 8 years ago? Maybe 7 or 8 years ago? 7 years ago? And now the Dow is I'm not too sure, but I think it got up to 44,000, the high. The NASDAQ, that's incredibly overvalued. Oh my God. But my point in saying all this is the market got way ahead of itself. It predicted a rosy future for the rest of eternity. And we all know that usually never happens. The market is way ahead of itself. It's corrected 10% due to the rhetoric and ruckus that Donald Trump is creating in the market. I believe he's going to restructure the debt. I believe he is easing the American people into this inevitable restructuring. He seems to be going after countries like Greenland and Canada and the Panama Canal in order to shore up the asset sheet of the U.S. financial balance sheet. And that is what he's doing. You can see it as clear as day. He's got his orders from the banking elite that you need to shore up the asset side of the balance sheet, the U.S.'s asset side of the balance sheet, in order to mitigate the excessive amount of liabilities. And that is what he's going to do. He's already telling you what he's going to do before he does it. So we can expect Greenland, Canada, Mexico, Panama Canal, all of these nations are somehow going to shore up the American financial system. Because the world needs America. The world needs America more than Canada needs its resources. The world needs America more than Greenland needs its resources. The world needs Panama more than Panama needs its resources. Okay, so this is what's happening. Now, how does this translate to your portfolios today? We're just going to get to the bottom line here. It translates as whatever Trump's gains occurred during his first term are all going to be taken away during his second term. The market is going to inevitably crash 50 to 60%. That's a fact. It will happen based on the amount of debt that is in the system. The dollar is going to take a ginormous hit, which is going to catapult gold. Okay? Real assets are going to increase in value. And all you have to do in order to know this is that financial assets are predicated upon zero interest rates. Those don't exist anymore. Real assets are predicated, the value of real assets are predicated not only on the growth of the economy and the consumption factor of the economy, but they also are predicated upon the fact that it is real. It holds value for the future. Farmland, commodities, real estate, real assets, oil and gas, all of these things will hold their value as the debt system, the financial assets, implode. The reason why they're going to implode is because it's been over-financialized. The market has over-financialized itself to the point of death. Zero interest rates for, I don't even know how many years now. Let's do the math here. 15, 16, 17 years? Zero interest rates for 17 years has done this. It's created malinvestment beyond belief in the tens of trillions of dollars. These malinvestments are all within financial markets. Okay? They've all been financialized, and they're all going to have to correct a fair value. So, with all this said, we can go into the nuances of why this has to happen, but it does have to happen. Okay, so financial assets are going to take a hit. Real assets are going to grow in value. The debt system is going to have to be restructured. It's inevitable. Trump has already told you this. He's already trying to ease the American people into this. Ignore it at your own peril. This will occur. So, how do you position your portfolio? Well, you have to position your portfolio by getting out of AI, getting out of Facebook, getting out of Google's, getting out of the tech stocks, and going into hard asset stocks. Real estate, commodities, artwork, whatever it takes, anything real that holds its value needs to be bought up. And as the economy collapses, as financial markets collapse, the retainer of value will be these hard assets. If you can invest in the hard assets, real assets now, instead of fantasy assets like crypto, Facebook, Google, all that. I'm not saying it's nonsense, but in this coming economy, it is nonsense. If you can get positioned into a place where you can maintain your wealth, even if it takes a monetary hit, a monetary value hit temporarily, what will come out on the other side of this financial restructuring, it will be a blessing, because then you could take your real assets and you can convert them to Googles and Facebooks and AI and all that stuff for exponential growth opportunities. So the market got ahead of itself. It got ahead of itself with Bitcoin. It got ahead of itself with AI, tech. It's just way, way ahead of itself. So, hard assets will get you through the correction. It will get you through the debt restructuring. On the other side of the debt restructuring, you could take your hard assets and you could sell a portion of them to go buy the speculative tech stuff. But now is not the time to be in tech. Now is not the time to be in tech. Tech could take a haircut and will take a haircut probably by 50, 60%, maybe 70% before it bounces back up and skyrockets. So, with all this said, I think what I'm trying to summarize is financial assets are going to take a hit. Real estate's going to take a hit. All these things are going to take a hit. Oil and gas, they're all going to take a hit. But buying these, for example, buying a house in my neck of the woods right now is stupid in today's current date, March 30th, 2025. I think my house is probably worth $525,000 right now. I could foresee, as the economy deteriorates and the debt has to be restructured, and Trump is letting you know this is going to happen, that the economic hit that we're going to take is going to be so big and so broad that my house value could drop from 525 to probably 325, maybe 275 before it goes back up in value. Because defaults and bankruptcies will occur on second and third homes. The economic situation is dire because of the malinvestment. I don't know how many people in this area and areas all around the country that have taken out third, fourth, fifth mortgages to get in on an Airbnb fad to make rental income on the side. How many households have done this? There's houses everywhere down here that are vacant, nobody living in them. And they're not renting them out the way they need to rent them out. So as the economy continues to deteriorate and the debt system inevitably gets restructured, these people, these so-called speculators that are holding 3, 4, 5, 6 houses are going to go bankrupt, a lot of them, which is going to drive down housing prices. So when I say get into hard assets, you have to get into hard assets at better valuations. I'm not saying, even though it sounded like I was saying earlier, just get into hard assets willy-nilly. You still have to price the hard assets. I am saying that the AI stocks and the AI bubble is pretty much over. All of the speculative assets are pretty much over. The highfalutin tech stocks are pretty much over. They're going to correct by 60%. You could take your winnings from these tech stocks, put it into cash, and buy undervalued hard assets. Now, there are sectors within the hard asset community that are on sale right now, particularly oil and gas. That stuff is really, really cheap. Gold is getting a bid right now. Gold is probably mediocre priced. It's going much higher. But oil and gas is pretty much a giveaway. Real estate is still very expensive. So, the position that you need to be in is short the stock market. It's going to crash. Okay, this is what I'm doing. I'm shorting the stock market. I'm long gold. We've already seen some benefits out of that. I'm long oil and gas, and I hope to buy a lot more oil and gas and energy stocks and copper stocks and all that sort of stuff. But the timing of all these things has to be precise. It doesn't have to be precise. It has to be close to being right. So, as the economy deteriorates, financial assets sell off. If you're in a good position in cash, you can go in, you can buy oil and gas, uranium, more gold, copper, iron, whatever. You could pick these up at a discount. picking them up at a discount while the financial crisis is ensuing will enable you to come out of the other side of the financial crisis, the restructuring of the debt. It would enable you to come out in a great position to grow your wealth for your family in the coming years. So I expect, in summary, that this climactic crisis will occur under Donald Trump's watch. That's why he has been installed. He will make the necessary changes to make America great again. It's going to be very totalitarian. These changes will be very, very totalitarian, and it will be very painful for the next 3 to 4 years. Very painful. Lots of people will lose their businesses, they will lose their jobs, they will lose their houses, and you have to position accordingly because the debt is imploding. It's already begun. Just because they're not telling you about it on the mainstream media doesn't mean it's not occurring. It is occurring. You have to position yourself. Get into cash, buy hard assets on the cheap, emerge from this restructuring, debt restructuring, with a lot of hard assets that are priced significantly higher than where they are now. And then you can go out into the economy and buy financial assets again, AI stocks and all that sort of stuff, and make a killing. So with that said, I know this has been a confusing video. I've seen the video all over the place, but if you listen to this video a few times, you might understand my train of thought. I was kind of all over the place. I didn't come into this video with a structure, a template for how I was going to talk today. This is all off the cuff. So I will try to articulate this in my next video a little more precise, without so many conflicting viewpoints. Anyway, I hope you've enjoyed this video. I hope you have a good day. We'll see you soon.